Afternoon, everybody. Thanks for joining this webinar today, which is all about the latest from the government and the ever unfolding series of announcements about the support that's going to be available. My name is Andy Chamberlain. I'm going to try to turn on my webcam so that you can hopefully see me as well as hear me. I'm a bit close up there. Sorry about that. That was a bit of a shock. I'm joined today by my colleague, Alistair Hutchinson. Alistair, are you there? Hi, Alistair.
Hi, Andy. You're right.
Yeah, I'm good, thank you. I'm good. We're going to talk you through today the very latest on the announcements that have been made around the self-employment income support scheme, the furlough scheme, and the minimum income floor extension of the suspension, and one or two other bits and pieces. We're going to touch on bounce back loans. We're going to touch on some limited amounts of grants which might be available, and let you know a bit about what we have to say about all these things. Now, we think we might be able to do this one a bit more quickly than usual, so we may not go on for the full hour, but do ask your questions. We will hang around for an hour if you've got questions to answer. We might talk for around 20 minutes and then pick up your questions. Maybe we'll be done in 40 minutes. And try to give you the information that you need as quickly and easily as possible. This all stems from, and by the way, if you could let us know in the questions box that you can see and hear us okay, that's always very reassuring, because we're doing this from remote locations and things, and sometimes it doesn't always work. It pretty much mostly does. I did have a problem a few weeks ago with my internet, but just let us know. That would be great to know. And send in your questions as we go through, or whenever they occur to you. That would be really helpful. So what's happened? So we did a webinar last week, was it, Alistair, on the various support that was available, and it very quickly became out of date because the Chancellor keeps on changing what's going on here. The most recent announcement came on Thursday, and the Chancellor on Thursday said that the furlough scheme, which is the job retention scheme, would be extended until the end of March. He had previously said it would just be available for the month of November. He at the same time increased the amount that was going to be available in the self-employed income support scheme. And we've also had since then a sort of U-turn on universal credit, and particularly this thing called the minimum income floor, which we will touch on. All of this means we are now quite a long way away from where we were when the Chancellor stood up and announced the winter economy plan, which was about a month ago, which was, look, furlough's going to end and we're going to have this new thing called the job support scheme. So there's been, as I say, a series of announcements, each one sort of superseding the one before. So it's quite hard to keep up. But what we're going to try and do now is talk you through where we are right now. I'm going to hand over to Alistair now, who's going to talk us through the self-employment income support scheme.
Thanks, Andy. Yeah, so this has all changed quite a lot actually over the last kind of 6 to 8 weeks, and so we'll try and bring you up to speed. I think the two things to note really on the self-employment income support scheme. The first, really just a reminder that as we all know, that was announced back in March, and the first one opened, I think it was in May. It was then extended a second time, opening in August, and it has been confirmed that there will be 2 further grants covering the period from the 1st of November to the end of January, and then the 1st of February until the end of April next year. So the key thing the Chancellor has announced is that this third grant, or this next upcoming grant, depends which way you want to number it, that has now been effectively returned to what it was back in that March, April, May period. So it's back to 80% of your past average monthly trading profits. Be paid out in a single instalment covering 3 months worth, and it'll be capped at £7,500. This has chopped and changed an awful lot in the last few weeks. Originally, it was said that it would be 20% for the 3-month period. That was increased pretty recently to 40%. We were then told that November's amount, the month for November, would be 80%, but that December and January would be kept at 40, which meant overall that the third grant would be 55%. The Chancellor has decided to basically stop messing around and tinkering with all those kind of different variations, and in line with the furlough scheme, which is 80% of wages, this will now just be 80%. So the clearest way to think about this is this is a reversion back to the very initial scheme. And there are pros and cons with that. So in essence, it's really pleasing that this amount has been increased to 80%. We said when the first phase came out, for those that are eligible, that is a generous amount of funding. The downside is, of course, that the eligibility criteria, as we'll get onto, hasn't changed. In terms of just the other points on that slide, the fourth and final grant, which will be covering that period from February to the end of April, the Treasury is keeping it kind of cards close to their chest there on how much that'll be worth. I suspect there won't be any kind of drastic reduction from the 80%, but things have changed a lot, so we'll see. But they haven't confirmed that yet. And just to reiterate, the grants are still subject to tax and national insurance contributions. In terms of when you can apply for this third grant, again, there's been quite a lot of speculation. The government, I think, had actually said that they were, I think our understanding, Andy, originally would be this would be up and running quite early on in November. Actually, what the government has said was they were due to introduce it in December, but they're going to be bringing that forward. And so the applications will open on November 30th. So still, a few weeks away, that really. So a bit of a kind of anxious wait for some people. But that's when we're expecting this to open up. So if you want to go into the next slide.
Oh, sorry.
That's all
there we
right.
are.
And also just a point on that as well, which we're very much aware of, and we've seen a bit of commentary on this. If you think of the first grant, that was covering March, April, May. The second grant was covering June, July, August. The third grant is covering November, December, January. That does kind of leave 2 months, which would be September and October, which are kind of missing months. And so that is another, we'll get on a bit later on to our kind of view on the state of play really in terms of self-employment support. But that is another, a bit of a gap really in comparison to the employees who've been able to use the furlough scheme right through this period. There's a kind of 2 missing months there in this phase. But as I said earlier, the eligibility criteria remains unfortunately unchanged. We have, made several submissions to the Treasury outlining ways that we think that this could be expanded and changed, but the fundamentals do remain. You must have a tax return from 2018-19 and 17-18, 16-17 if those are applicable. Your trading profits must be below £50,000. So this is the profit cap of 50k. Again, we were skeptical about this. We felt that, again, similarly, there's no such profit cap on the furlough scheme, but that has remained in place. And your trading income must be at least equal to your non-trading income. Again, they're just trying to kind of make sure that this was targeted at people who are predominantly self-employed rather than having kind of a side freelancing work that they're kind of bringing additional income for. And you must be a sole trader or a partnership. Unfortunately, still no access to the scheme for limited company directors. The one final thing, so I mean, the overall picture, as I was saying, is that this is pretty much a reversion to the first SAYS grant when it came out. One thing that we have noticed in the kind of fine print, and I should say we're waiting for more guidance on this and the job retention scheme, which Andy's about to speak on shortly. One thing that we have noticed is a slight change in the wording. So before and on these webinars, you'll have heard us speak about this phrase adversely affected. So in order to claim the SAYS grant, you had to prove that your business was adversely affected by the coronavirus. And you remember on previous ones that we've done on this, that is quite broad, pretty ambiguous, open to interpretation. But in general, that to us looked like anything that would be a direct financial or economic impact to your business. So if you could evidence contracts that have been cancelled, projects delayed, or just a decline in your income. And it also, to us, looked like, if you were ill, if you had to self-isolate, if you had caring responsibilities, if you're shielding, those kind of things as well, that to us would be adversely affected. They have changed this now slightly to saying that your business must be actively trading or intend to continue to trade and impacted by reduced demand. So that is a slightly different piece of wording. And I think this is part of a movement, even though this scheme has basically been reopened and reverts back to the original, there's been quite a lot of press coverage in the last few weeks, and a bit of criticism from some corners of the kind of policy making world, that the SAYS has been a bit too broad. Now, we would obviously disagree with that. We think it's almost not been broad enough because it's missed some key groups out. But essentially, there is a bit of a criticism that money has been given to people who didn't necessarily need it, or have only had a very small kind of impact on their business. So I think this is a way that the government is now beginning to think about, okay, how can we perhaps target this a bit better and narrow it down? So that's the key thing to look out for, is reduced demand rather than adversely affected.
And just to sort of jump in on that point, Alistair, if you don't mind, I did speak to them at the Treasury, and they were sort of saying, well, adversely affected could have been, for example, a business may have had to invest in some PPE in order to deal with the coronavirus. So that's an added expense. So they're adversely affected. Now, under this new rules, that wouldn't count, because it's about the demand. So even if you have had to go off and spend money on PPE, or even if you're not working because you're shielding or these sorts of things, that's not reduced demand. That's you either having increased expenses, or it's you choosing not to work. So this idea of reduced demand, and I think that there probably is, in the end of the day, just about as much room for interpretation of reduced demand as there is for adversely affected, maybe just about. I mean, for example, I wonder what would happen if someone can say, well, I've had reduced demand because one of my normal clients haven't had any work for them because they're in the events industry or something. But with my other client, I've actually put my prices up. So at the end of the year, I've sort of done okay. You know, maybe I've done better than I did last year, and I've claimed the SAYS grant. Now, how's that going to be viewed upon when the time comes to look at this? And I think that time may not come until January 2022, when everyone gets their tax returns in and declares their income in the period that we're in now. And are we heading towards a bit of a situation where we're going to have a big controversy around, you claim the SAYS, we now decide that you shouldn't have done because your interpretation of these wordings wasn't quite how we had it. So we want you to pay that money back now. I think that that's something that we should definitely be keeping an eye on. I'm trying to get clarity from HMT and HMRC over what really they mean by this, and maybe some worked examples of where they think it's appropriate that someone claims the SAYS grant and where they don't. Because the sooner we can get that information out to people, the better. Because I do just worry that at some point in the future, there's going to be a lot of people getting letters from HMRC saying, look, you claimed the SAYS grant, but then you've told us that you did okay financially in the year. I almost wonder whether it would be better to say, you know, you need to, if you have not experienced less income in this year than the previous year, we may ask for that money back or something like that. There's something a bit clearer. However, people don't know now when they're claiming the grants what their final year position is going to be. So even that's not straightforward. So there's no easy answer to this, but I just worry about these phrases, and the fact that they're changing them shows me that they're definitely, as Alistair says, thinking about this, trying to maybe just draw the net around who's actually going to claim this money, and frankly give themselves some wiggle room to go back to those people later on and say, we don't think you've claimed this appropriately. Just something to be aware of. Okay, I've probably waffled on about that too much. Okay, the job retention scheme. So we've had a couple of questions in already. I mean, Sarah's asked, is there anything for limited company directors? And Sarah was saying, I think I've lost the question now, but Sarah was saying, look, I couldn't get on the furlough scheme before. Some people couldn't do it because of the way that it worked. You had to be on the payroll before a certain date. People who paid themselves an annual payment into the tax year missed out. And Sarah was saying, I was looking forward to the job support scheme, thinking I'd be able to get something out of that scheme. Is there anything now from directors? Well, I think, Sarah, that hopefully you will have the option to make use of this scheme, and I'll run through how this is going to work now. So the job support scheme, which is, we were spending ages trying to get our heads around this, and it was a more complicated scheme than the furlough scheme, and we were doing webinars on it, and we were preparing a letter for our members to be able to send to them their own companies to make use of the scheme. That's kind of gone. It's postponed, but maybe it will never. I think it's quite likely that we'll never see it now, because we've had this furlough extension for 6 months. And then if you couple this with the news of hopefully maybe even a vaccine that will be available, we may never need to go into something else at the end of this 6-month period. So that's gone. The furlough scheme that we had before is back, and it's extended until March, as I say. it's about 80%. This is the original figure. So essentially, an employee who is furloughed from their company, the government will pay 80% of their normal wages up to a maximum of 2,500. They're saying that claims can be made from the 11th of November. And as Alistair mentioned before, there is going to be new guidance on this, which unfortunately for us hadn't been published as of about half an hour ago, but we think might be published later on today. So if there's anything different in there, we'll have to come back and do another webinar to put this out. But we think we've got just about the bare bones of this. You can do flexible furlough. So in the initial furlough scheme, it was all or nothing. There was no flexibility. It's just furlough someone. They had to then be off work for a minimum of 3 weeks, and then you could get the 80% payment. Then they brought out flexible furlough, which allowed firms to say, well, they can come do a bit of work, but not all the work, and we'll make up a bit of the extra. This, I think, is quite important for company directors, because one of the great drawbacks, and I think Sarah may have mentioned this in her question, of the furlough scheme was that you couldn't do any work at all under the initial furlough scheme. And if you did do any work at all, and I mean like talking to a client or teeing something up for later on, maybe working on your website, whatever it might be, all you could do was your statutory duties as a company director, i.e. filing accounts at company's house or sending a tax return or whatever. So it was really quite restrictive. The flexible furlough means that you can do that little bit of work and still claim the furlough for the time that you're not working. One other point to make clear is that employers will be asked to cover NI and employer pension contributions for the hours that are not worked. But bear in mind that for many company directors who have made use of the furlough scheme, they don't pay NI anyway because their salary is below that, which means this scheme isn't that generous for them. But you may not have to worry about the NI part of that. Okay, key thing here, particularly for Sarah, is that you don't have to have previously been on furlough to claim this new round of furlough or JRS, job retention scheme. Before, you may recall that there was a cut-off date. If someone hadn't been put on furlough by, I think it was the 10th of June, they couldn't do it then, even though it ran up to the end of October. They couldn't then make use of it. You could only furlough someone who you'd furloughed before. Well, now we're starting again from a clean slate. So if you've never used the furlough scheme, but you now want to, you can. You need to be on the payroll before 30th of October. And the employer must have made, that's you, it's your company. For most people watching this, this is you. The employer is you as well. You must have made a PAYE real-time information submission to HMRC between the 20th of March and the 30th of October. So that's quite good because, as I mentioned before, the initial round of furlough was actually shut off from a lot of company directors because they didn't get on the payroll of their own company before the 19th of March. They made an annual PAYE payment to themselves at the end of the tax year. Now we've got this situation, so anyone who didn't get onto that one should be able to get onto that one for that reason only. And just to stress again, actually, we may have jumped ahead a bit, this is only for the salary part of your income. Dividend income that you may have lost because of coronavirus is not supported through this scheme. We think something should be done for lost dividend income because they're supporting everyone else's income. What difference does it make? However, we've been round the houses on this one. We've written to the Chancellor, we gave evidence to the Treasury Select Committee. They took up our recommendation very forcefully and put it back to the government and said, look, IPSE's got a solution. You should do what IPSE is telling you. The government has said no. So we are where we are. It's not for dividend income, it's only for salary income. So, and then just this last bullet point's slightly more complicated, but what it's really saying is that if you've made yourself redundant from your company, or if someone's been made redundant from their company, they can be rehired and then put on furlough. This is a way of the government trying to say, we're trying to save jobs here. So please, if you were worried because you thought that the furlough was ending and the job support scheme didn't look as generous to you, so you let go of a bunch of staff, please rehire them and put them on furlough, because we are trying to control the unemployment rate. New unemployment figures out today, of course, have shown a pretty sharp increase, nowhere near the sort of all-time highs of the 1980s and 90s, but climbing quite dramatically in the last quarter or so. Okay. As I've said, company directors can make use of the JRS. We have a furlough template letter. We're going to update that to make sure that that still makes sense for anyone that wants to make use of the new furlough arrangements. Good to have that letter in place. So if you're an IPSE member, you'll be able to have access to that. One important point to note is that there was this thing called the job retention bonus. This was the £1,000 that firms were going to be given if they rehired someone who had been put on furlough. So, and you could make use of this inside your own company as well. So if you as a company director put yourself on furlough and then you say, well, I'm not going to make you redundant, I'm going to rehire you, you get a £1,000 bonus. Now that's been postponed because we've still got the furlough running. And they say that they're going to redeploy a retention incentive at the appropriate time. Very non-committal wording there. So we may or may not see that job retention bonus again. Maybe it will be less generous than they were talking about it being. We'll have to wait and see. I suspect it's all going to depend on what the jobs market looks like at the appropriate time. You would have thought that's going to be the end of the furlough period, so March, April, May. There may be an extra bonus paid out to people there who have made use of the furlough scheme, but there may not be. Let's wait and see on that one, I would say. Okay, I'm going to hand back to, now let us know any questions, anything that's not clear, let us know. But I'm going to hand back while you're doing that to Alistair, who's going to talk through some of the other measures.
Thanks, Andy. Yeah, I can actually see quite a few questions coming in on the furlough scheme in particular, so we'll come back to that at the end. This is the usual kind of slide where we try and wrap up a lot of the other bits and pieces, just in case you might have missed them. There's not a huge amount of new content here, so I think really I won't kind of dwell too much on them. I think the key things are the mortgage holidays. So again, similar to furlough and the self-employment scheme, which was announced earlier in the year, this is a bit of a reversion to what had come before. So this was the deadline for these mortgage holidays was due to end on the 31st of October. These have now been extended, and you can apply for one up until the end of January next year. This is obviously, you can get different things depending on whether you didn't use one, whether you did use one but only used it for 3 months, or whether you used one for the whole kind of 6-month period. So it will depend, and you'll have to speak to your lender and do a bit of information finding about that. But that's the kind of the headline. And similarly with payment holidays that are available for consumer credit products, typically things like credit cards and other loans. Again, a lot of those were due to end the availability of those on the end of October, and that's been extended until the end of January as well. And I should say we're kind of still furiously updating our advice pages and FAQs on our website as well. So if there's anything that you've got any concerns or questions about, then do head over there, and you can send us an email directly as well. Business grants, we've covered these in a bit more detail. I think this comes with the caveat that these are really kind of heavily targeted towards, first of all, businesses with a physical premises, and secondly, ones that are in what the government views as the kind of hardest hit sectors, so retail, leisure and hospitality. That is where the business grant funding is being prioritised, and the amount that you can get will depend on the rateable value of your property. We've spoken a bit about discretionary funding as well. So essentially the government, in addition to a kind of baseline level of support that they are giving to local authorities, are providing a bit of a top up in terms of grant funding. And that's really then left for the local authorities to distribute to businesses in their area. This was all getting a bit more complex with the introduction of the tier system, which now seems to have been kind of similar to the job support scheme, quietly kind of postponed. But essentially, I think our key message to members and people who are self-employed, and the majority of whom will not have a kind of physical business premises, is there's certainly no harm in checking with your local authority to see if they have grant funding available. And if you've missed out on other schemes, then definitely worth checking and seeing if either through the local authority or through kind of local business groups that they can offer anything as well. Bounce back loans, we've touched on these before as well. The key things to note, firstly, is that the deadline, it was first extended into November. That's been extended again in line with these other measures until the end of January 2021. So there will be more opportunity to apply for those. There's been a couple of other changes which we've discussed on previous webinars. The repayment terms have become more flexible. Again, you'd have to agree that with your lender, but it's things like paying over 10 years rather than 6. And one important thing, because I think I just spotted a question with it in the chat box there, but I can come back to it at the end, is they've introduced a kind of top-up bounce back loan, and I'll just read out the kind of guidance on this because it's a bit of a mouthful. But essentially, if you've taken out a loan, you can now basically go back, and if you feel that the money that you initially took out was only enough to tide you over, say, until November or December, you can use that extended deadline until the end of January to now top that up effectively. And so I'll just read the wording out from the British Business Bank website, which is quite clear. So a borrower can apply for a top-up that is for the lesser of £50,000 or 25% of the annual turnover the borrower certified in their original successful bounce back loan application form, minus the value of their original loan. So if anyone has questions on that, then do drop them in and we can try and answer. But effectively, if you took out a loan and you think you might need a bit more money, then there are ways of topping that up over the next few months. Lastly, the help with tax. Again, we've touched on these before. The VAT deferral new payment scheme. You will remember earlier this year, you had the option to do an automatic deferral of VAT payments. You can now spread the cost of repaying that back over the next financial year, break it down into installments that would be interest free. Again, as we mentioned before, unfortunately, this one, or fortunately, depending on the position of your business, this one you will have to apply for. The government has said it's working to set up a kind of online site for you to apply for this. But the key thing to note is this is something that you will proactively have to apply for. It's not automatic in the way that the initial deferral was. And similarly, you can take out a tax deferral for your self-assessment payments that are due in January as well. And just a final thing to note there, don't want to make this too England-centric. Obviously, as a Scot myself, worth adding this in. But just to note that the job retention scheme, self-employment income support scheme, bounce back loans, mortgage holidays, these are all applicable on a UK-wide basis. There's clearly been a bit of tussling going on between the devolved administrations and the central UK government as to whether these things would apply in different nations that are doing slightly different things in terms of the restrictions, but the battle has been won by the devolved administrations, I think, there, and these schemes will be applicable there. And similarly, in terms of grant funding, due to the slightly complex financial formula that leads to the kind of block funding that's given to the devolved administrations, these will all be increased in line with these other measures as well. So as I say, we've touched on these before, and there's plenty of information on the website about these as well in more detail, but that's just a quick recap of a few additional things that the Chancellor announced last week as well.
And Alistair, just on the bounce back loans, because we've had a question from Louise who says, look, so far, if you've claimed it, you're only allowed to claim the 25% of turnover. That's the maximum. And you can only claim that once. Am I right in saying that they're not extending that overall limit? So if you've claimed your full allowance on the bounce back loans, you can't go back now and claim more. But if you hadn't claimed the full allowance, you could go back and claim the rest of your allowance.
That is my understanding of it. As I say, we'll do a bit of digging and we'll try and get a few worked examples up as well. But no, that's my understanding. Is it's really designed for those who did not take out the kind of full maximum amount first time round. But I will double check that just in case.
Great, thanks. So I just thought I'd quickly mention that we did have a win last week as well. So the minimum income floor is a mechanism that exists within universal credit. So if you're a universal credit claimant and you're self-employed, you have to wrestle with this thing called the minimum income floor. Essentially what the minimum income, or MIF, does is it assumes a basic level of earnings. It says, okay, you're self-employed, so that means we're going to assume that you're earning a certain amount of money from your self-employed business, even if you're not really. We're just going to assume that you are. And we're going to calculate that based on minimum wage working 40 hours a week, I think it is. So it's, it's quite a bit of money. And then they calculate your entitlement under UC on top of that. So it's a way of reducing what you can get out of universal credit. Now, they suspended the MIF. It's always been controversial. We've given evidence to select committees about this thing when it was being designed a few years ago. They suspended the MIF at the start of the pandemic, and they said 6 months we won't have we will have no MIF in universal credit. But that extension was due to end on the 12th of November. So we wrote to the Secretary of State for Work and Pensions. We were on the Today programme last week calling for the suspension to be extended. And we were very pleased that last week, Thursday maybe, they announced that it would indeed be extended for a further 6 months. So that was good news there for anyone who is a universal credit claimant. I mean, universal credit isn't a tonic for everybody. There's lots of reasons why you may not be eligible for it. If you have too much in savings, if your spouse who you live with is earning too much money, if you have pension income, if you have investment income, anything else that might be the case that might reduce your entitlement to universal credit. But for anyone who is falling outside of the self-employment income support scheme for the reasons that we've highlighted, which we think are unfair, and you can't make use of any other schemes, and you find yourself looking at UC, it's worth having a look at it, because there has been a big increase in the number of self-employed people using universal credit during the pandemic, and the fact that the minimum income floor is not something that you have to wrestle with once you're inside that is a good thing. Well, not for the time being anyway. Okay, just to sort of update you, what do we think about all this? Well, we think that it's good that the schemes, the main schemes, the JRS and the SAYS, some people say Cs, we say SAYS, have been extended. Going back to 80%, it looks pretty generous to us. I mean, if we're being completely honest, we're somewhat surprised that the government has been quite so generous as that inside both of those schemes, going right back to that initial kind of amount of grant available. However, it does nothing for the excluded I'm sorry about the typo, which I've just noticed in the middle of that line there. It does nothing for the excluded self-employed groups, and this is the big problem. So we know that if you're new to self-employment, and when we say new, it's not even that new anymore. It means you've been trading since April 2019. You get nothing under SAYS. If you earn profits of over £50,000 previously, you get nothing under SAYS. If you are a limited company director who is self-employed, but you've just incorporated a company and you may work alongside some other people who haven't done, and there might be various reasons for that, you get nothing under SAYS if you're a company director. This is the problem. SAYS is a nice, generous pot if you fall into it, but it's got very sharp edges. And if you fall outside of it, it does nothing for you. And I think more sort of broadly, and Alistair did touch on this, there have been criticisms of SAYS from the Resolution Foundation and others who say that it's just been horribly targeted. They say the problem with SAYS is that it's too generous to too many people, but while also it is not nearly generous enough to so many other people. And actually, I think that we would agree with that. I think that we would say that, many people who didn't really need the support have received a grant under SAYS, and many, many other people who desperately needed support have received nothing from it. So we've been saying to the government, let's think about this a bit more carefully. We're calling for a focused, flexible and fair scheme, which is going to help people that really need it. And whether they're working for a limited company or not, or whether they're new to self-employment, let's come up with something that actually gets help out to people that need it. And it's disappointing, very disappointing, that the government has done nothing to address that. I mean, yes, thank you, government. You've been generous. You've given this 80%. But we've been highlighting this now for the last 6 months, and you've basically just committed us to a further 6 months with the same problems. And there's been very little done around that, and that is disappointing. And just one final quick thing I might say on the newly self-employed. What's interesting is that, as Alistair said, this third round of SAYS is going to cover November to January inclusive. And then the fourth round of SAYS, which we're promised, but the terms of which we haven't quite been agreed yet, is going to cover February to April inclusive. Now, by February, you're going to have the tax returns from the 1920 year in, because obviously the deadline's the 31st of Jan. So people are going to get that tax return in. HMRC are going to have the information. What justification can be given at that stage for those people not to be included in the save scheme? And will they have a reasonable claim to say, can we backdate it as well, so I can make use of SAYS 3? And why not 1 and 2 as well? Because, you know, if you're now saying I'm eligible, I was eligible then. I was just as eligible then as I am now. So this is all another sort of problem with these schemes. You know, we are grateful to the government for doing all this. It's not easy to set up these new schemes, and overall they have provided quite generous support. And I actually genuinely do believe that probably Rishi Sunak's key priority for all of this is to prevent unemployment from getting out of control, because I've been involved in various meetings with him and things, and he keeps on referring back to this. He really wants to save jobs. That is his. He is determined to do it. That is his number one thing that he wants to do throughout this pandemic. So his heart's in the right place, but there are too many. Unfortunately, I fear that his overall view is, as long as I can save X amount, it doesn't matter about the Y. And what we're saying is there's a human cost to all this. There are things that we can do to help the Y. So let's look at this again. All right, okay. Waffle on a bit there. Sorry about that. On my soapbox. So here's some useful links. We're keeping that coronavirus FAQ page updated as best as we can. We do update it quite a bit. If you're not signed up to our newsletter already, please do sign up to it, because then you'll hear about all of our webinars that we've been doing that you might find interesting. And of course, you can go to our website. Right then, let's get to your, I think that's the last slide, isn't it, Alistair? Yeah, that is. I'll leave the links back up there so you can see them. Oh, I've done it again. Right. Let's get to the questions now, and I've jotted down a couple while you were talking, Alistair. Kashai has said, when does furlough begin and end? So I think the answer is that the furlough scheme is effectively open from the 1st of November until the 31st of March. But bear in mind that the current outline of how this is going to work with the 80% and the maximum per month and all of that, that's only until the 31st of January. That's guaranteed 1st of November to the 31st of Jan, and then they're going to have another look at the at how it's going to work for that remaining period, which goes up to the end of March.
And just, sorry, Andy, that's the period that's covered by the scheme. But in terms of when it opens, again, as far as we know, the government guidance says it will be open on the 11th of November, which would be tomorrow. So that is presumably when claims can be made online, and they will have the system up and running. So from tomorrow, essentially, is when you can start making claims.
Quite right, yeah. 11th of November is the key date if you want to get a claim in, but you can go back. It will cover the period from the 1st of November. Now, there's a question that I've been wanting to get to, because Marie asked this question right in the beginning. So Marie's saying, and Marie's in a difficult situation here. Can I claim anything yet? I've worked through my own company since 2006, but for the last 3 years, I've been on a bigger project that's been inside of IR35. So I was on the payroll of my client rather than of my own business. I've had virtually no income since April, as projects are understandably being held back. I appear to be penalised for doing the right IR35 thing for the last 3 years by being excluded from the COVID support. Now, Maria, I don't know whether it's a bit of a coincidence, but it was 3 years ago that the rules changed in the public sector. So I don't know if your client is public sector or not. But if they are public sector, they were sent notice from the government, from HMRC, saying that if you have people who are working inside of IR35 and therefore on the payroll, you can furlough them. So your client had the opportunity to furlough you because you were on their payroll, unless you'd been taken off that payroll before that key date. But I think even then they might have been able to do something. Unfortunately, I think because you haven't paid anything to yourself through your own company, you can't make use of it in the way that we've been saying here, with the idea being that your own limited company could furlough you, Marie. that's not going to be available to you because you've had no income. You've not been paid anything from your company. You've been paid directly from your client company, which means they could furlough you. Now, I don't know what your relationship is with them right now, but it's possible that they could furlough you now. So I would go back to them and ask them about this. Even if they were in the private sector, I think that because you're on as long as you're on a payroll and RTI submissions are being made and taxes being deducted on payments to you personally, that's the golden rule here. If that's happening, I think you can make use of it, or whoever is paying you that can furlough you and make use of the scheme. So I'd go and talk to them, Marie, and I'm sorry I can't give a more accurate thing, and I do think you're in a particularly bad situation if you've received nothing at all because of the mess that is IR35. Okay, any other questions at all, Asa, that you've noticed?
Yeah, there's a couple. One was from David, who is he set up as a limited company and is based in Wales, saying he missed out on what he says is the third tranche of the Economic Resilience Fund at the end of October. So that is the Welsh government, similar to the Scottish government and the executive in Northern Ireland. A lot of these devolved administrations have set up schemes in addition to the UK central government ones. So the Economic Resilience Fund is one of the Welsh government's ones. And he's basically asking, I've just missed out on that. You can apply for a maximum of £10,000 for micro businesses. Are you aware if there's likely to be a fourth one? I did actually see a couple of days ago that there has been an announcement on this. That's all it's been so far, an announcement. There's no published details. But the economy minister, I think he's called Ken Skates, said that there will be a fourth kind of phase of this. It will be worth about £300 million. So absolutely keep an eye out for that, because from everything that I've read, it looks like that will be happening. So make sure you kind of just keeping hitting refresh on the Welsh government website, I think, for that one. There's a question just above that from Paul, who says, if in a limited company all on PAYE are claiming a full furlough, can the business apply for the bounce back loan as well as that? I think yes is the answer to that. I'll double check with you, Andy. So if you're a company director and you're on furlough, you can still claim the bounce back loan for the company. These things are kind of, there's no bearing on one or the other that you can use that. Is that right?
Yeah. Imagine a bigger company which employs 20 people, right? And they can decide to furlough some of their staff, and they can also go to the bank and get a bounce back loan. It's exactly the same if you've got one small company with one person inside it, which many people who are watching this webinar might be in that position. There's nothing in the rules that say, oh no, you can't do that because it's only you in the company. You can do that. But there is probably, I don't know if we touched on this or not, I was scribbling down questions, but look, just on the bounce back loans, it's becoming increasingly clear that it's difficult to get. If you haven't had one before, it's difficult to get now. And there's an ever dwindling pool of lenders who are actually putting these things out. And if you don't have a business bank account with one of those lenders already, then you're probably facing a bit of a wait, and they're saying, oh, we're not taking on new customers now for business bank accounts. And there's a bit more of a reluctance, essentially, from the lenders to dish out these loans than there was previously. Doesn't mean that it's impossible to get, but it definitely is harder. Whereas initially it was very much like, yeah, I went to the bank, got a bounce back loan, no problem. It was all done and dusted. It was very easy. It's not so easy now. So just to make you aware of that, in case you're thinking, oh, that's okay, then I'll just go and do that. It may not be as easy as all that. We had a question from Tony, who says, and we've had this question a few times, and so Tony, I'm going to paraphrase because I've actually just lost your question in the small scrolling thing that we have to look at. But I think what you were saying, Tony, has there been any announcements on payback of loans because of IR35? So essentially, the IR35 rules, which are due to come in place in April, are going to mean that many contractors who may have taken out a bounce back loan are going to be placed on the payroll, perhaps of an umbrella company. Their limited company might be removed from the supply chain of this. So there'll be no money going into the limited company. And yet that company still has to repay a bounce back loan, not in the first year, but after that, they will have to start making some payments under the current terms. So how is that company going to be able to do that if there's no money in it? Now, this question was put to Paul Mason, who from Markel Tax, who did a webinar with us recently. And he said, look, you've got to it may well come down to the fact that the directors may have to inject some cash into their companies to pay back these loans. So essentially you can just put money into the company and then the company can pay back the loans. It may not be the answer that I think we're sort of hoping for here. But I mean, I take the point, Tony, completely. It's another reason that the IR35 rules are just so exactly what we don't need right now. And it will cause a complication, but ultimately it's going to be your company is still going to have to repay that money, even if it's not making any money. You'll have to put money into it to make those payments.
Just on that, Andy, I think one of the questions, actually, I think just because we've touched on IR35 a few times, one of the questions from Russell was just asking for kind of, an update on IR35. How is that, the campaign against it progressing, and what's the latest state of play with that and with IPSE as well?
Look, IPSE is still 100% opposed to the private sector changes coming into place. Sorry, I'm just trying to move something around here. We are continuing to make the case to the Treasury that this is the last thing that we need, particularly right now. We're saying, look, if you delayed it bearing in mind these rules were supposed to come in this April 2020, but the government at the last minute said, oh no, we won't do that because this pandemic looks like it's going to cause us a few problems. Well, now we know the pandemic's causing us a few problems, and business is not going to be in any better state to deal with it in the coming April as they were in the last April. So the same logic that led you to delaying it last year should lead you to delaying it this year. And we're continuing to make that point. However, the government appears absolutely intent on bringing these rules in. And I'm afraid to say, I think that we have to also prepare ourselves for them coming in as best as we possibly can. There was a vote in the House of Commons in the summer, and there was an amendment which was put forward by David Davis, which we supported, which we tried to get lots of other MPs to support, and we got all the opposition parties to support it and vote for it, and about 12 Conservative rebels as well. But we needed about 40 or 50 Conservative rebels to get it defeated, because they've got such a big majority in the House of Commons. And rumour has it that Boris Johnson himself was going around to MPs and saying, we really need to get this through, don't support that amendment. So, it's clear that at the very top of the government, they are determined to push this through. And therefore, despite our lobbying and our campaigning and all the perfectly reasoned arguments that we may put forward, I think we have to prepare for this coming in. Just one other quick thing on it. There is this problem I wrote a blog about a little while ago around there's a problem in the legislation. HMRC, it's not just me saying it, HMRC actually told me about the problem. They've acknowledged it and they've published a note on this. It's highly technical, but it's all about what is the intermediary and who needs to deduct the tax in the supply chain as the payment comes down and makes its way towards the contractor after someone at the top has decided that IR35 applies. It means, tax has got to be deducted, but by whom? It should be the entity directly above the contractor. Whoever's paying the contractor should deduct the tax. But a problem in the wording has meant that that's not very clear. In fact, it looks like the tax would need to be deducted from a payment from an agency to an umbrella company, which kind of negates the need to have an umbrella company in the first place and is a problem for agencies. So all of this is going slightly back round in circles behind the scenes. And I don't think, I'd love to be able to say to you, this is a fatal flaw in the legislation and they're going to just get over it, and they won't be able to get over it, and it means that IR35 is dead in the water. I don't think that is the case. However, I do think that HMRC don't quite know what to do about this at the moment, and that they have told me that this might require new primary legislation, which means it goes back into the finance bill next year, which means it gets re-examined by MPs, which does open up some opportunities to do some more lobbying on this. However, to temper the excitement that you might all be feeling around that, and I can tell that some of you probably don't care, but I get quite excited about this, just to temper that excitement, we still have a Conservative government whose leadership is determined to push through this change to IR35 and who has a huge majority in the House of Commons. That is unfortunately what we're up against. So I think we better prepare for this coming in, and we are doing, next week I'm going to be talking to clients about how they can best implement this. A lot of our lobbying work is now going to focus on making sure that clients don't do blanket determinations and things like that. So trying to manage the post-April 2021 world as best as we can. Okay, I've probably gone on about that enough, Alistair. Was there any other questions that you've noticed?
There's one or two. So there was one from Sarah saying, so if I'm a limited company director, if I now choose to do flexible furlough, will I be able to claim the job retention bonus if it is just me as the sole employee director? I think the answer to that is if and when they reintroduce the job retention bonus or a similar incentive for people keeping staff on, then you will be able to make use of that if you're a company director, regardless of whether you're on full furlough or part-time flexible furlough. When the guidance was published on the job retention bonus, it was explicit that company directors could make use of it. So if you are still, whenever that may be, once furlough ends and the government is beginning to look again at more of those kind of incentive type policies to companies to keep staff on, then you should be able to claim that. I don't have any doubt about that. But as I say, and as Andy mentioned earlier, that job retention bonus has been postponed until who knows when just now. So you won't be able to claim that in February.
Okay, Carol's asked, any idea why HMRC wrote to me on Friday saying I owed them VAT when I had requested to defer my VAT payments until 2021? I've written back to them, impossible to get through on the phone and waiting to hear. Just wondered if you've come across this. That's the first I've heard of that sort of instance, Carol. But I mean, I hope that this gets sorted out. If you've already requested to defer it, then and you can evidence that, then you should be fine. But you know, it's a murky Kafkaesque world dealing with HMRC sometimes, isn't it? So just keep a record of your communications would be my advice, because you're absolutely right. You can defer that, and they've also released this time to pay. They're not calling it that, are they? They're calling it the new payment scheme or something, Alistair. You mentioned it on one of your slides, I think, which means that you can stagger payments of that you've deferred over a longer period of time as well. I'm hearing, seeing you, but oh, sorry. I'm just trying to find something. Oh, Louise, by the way, said to me earlier on that she can see my lovely famous blinds. Thanks, Louise, for that. I think you emailed me because you saw me on the BBC with the same blinds in the background.
I'd seen one, Andy, which was asking about, is there a list of activities that you can and cannot do whilst on furlough as a company director?
Yeah.
I suppose that we can maybe talk about this a little bit, but I think the main intention of bringing back the furlough scheme as it is now is that it's more similar to how it was operating in kind of August than it was originally. So you can use that flexible furlough aspect, which hopefully should mean that you can at least dedicate, a few hours of your week to doing proper, all the things around revenue raising and marketing your business and filing accounts and things that were, there was a bit of a question mark over them in the original scheme when you had to totally kind of cease your kind of contract of employment almost.
Yeah.
So I don't think an explicit list exists, but Andy, yeah,
well, there is this thing about your statutory duties as a director,
yeah.
And I think from memory that, I mean, I'm sure there's lots of people on this that know this better than I do. I think that there's about 7 of them. And funny enough, one of them has always been a bit problematic for this, because one of your duties is to do all that you can to ensure that your company makes a profit or something like that. So it's quite hard to do that while sitting around doing nothing under furlough. It would seem in direct contrast to that. But putting that difficulty to one side, it's pretty restrictive actually. If you're on the full-time furlough, then your activities are pretty seriously restricted. You can, as I say, file accounts at company's house, do a tax return, but you can't really do anything to kind of that could be construed as either generating income for your business. You certainly can't generate income for your business, and you can't do something which might be geared towards generating income for your business, such as fixing up your website or whatever. All of these things, or talking to clients, answering the phone. I mean, it gets a bit silly, really. In the early days of the lockdown, I perhaps rather foolishly, or perhaps I was a little bit gung-ho, and I was saying things like, look, if you're not generating income, then they're not going to know, so don't worry about it too much. But I've now seen that they've written to all these people who they say have either fraudulently or erroneously claimed under the job retention scheme. And so I'm a bit more cautious about all that sort of thing now. I would just be careful. And as Alistair says, the good news is that you can now do flexible furlough. and that gives you some wiggle room. So it means if you do answer that call from the client, or you do touch up your website or whatever, you can say, well, that was during my half day or 1 day of work per week that I was doing during the flexible furlough period. It will reduce your entitlement a bit by doing that, but I think it gives you that nice bit of wiggle room to do that little bit of work as and when you want to. So I'd look into that option if this is something that's concerning you. Dinesh has asked, a company director who was on a basic minimum salary of say £700 a month, that's around about what lots of people pay themselves, because it means that they stay under the national insurance threshold. Can he or she now increase this amount to say £2,500 per month? Will HMRC question this increase? Yes, I think, Dinesh, because you have to have been, they'll look at what the payroll was before they announced the scheme. Those dates that we said earlier is the key thing. So they go back to before the 30th of October and they say, what were you getting paid then? That's what we're going to calculate this on. You can't, I'm afraid, suddenly just give yourself a big pay rise now. Otherwise, companies all over the place would be doing that. So they're somewhat wise to that one, I think. Someone can tell me if I'm wrong about that, and there's a loophole I'm not aware of, but I don't think they're going to want people to suddenly just say, oh, actually, I paid them, X amount per year, when in fact it was a lot less, and I've now got to claim the full amount on that. Sarah says, should we close our dormant limiteds and be self-employed in time for next financial year? We are international travel agents and tour guides. Well, I'd have to know a bit more information about that one, Sarah. I mean, some people have been saying this because of the IR35 thing, because IR35 doesn't apply to you if you're a sole trader in an unincorporated self-employed business. But there are pre-existing rules which work a bit like IR35, or work like the new IR35 will do, which would hold your client liable if HMRC came along and said you should have deducted tax from payments to Sarah. So that wouldn't help you. You're international travel agents and tour guides, so I'm not quite sure. I mean, I'm sure you're having a tough old year of it, actually. So I'm sorry to hear that. But I'm not quite sure why it would benefit you to close the limited and become a sole trader. You might want to take some advice on that one. Okay.
Very, very quick ones from me, Andy, both actually on corporation tax. It's a question that we've had a lot over the last few months. One was asking if there's anything in place for you to defer corporation tax. It is not an automatic scheme in the way that the VAT one was earlier this year. But the key thing to do is if you Google HMRC time to pay, basically they have this service called time to pay where you can set up a kind of tailored arrangement to repay tax owed over a longer period of time, and corporation tax is one of the ones that you can make use of that scheme for. And then there was another interesting comment from Stephen, Andy. I don't know if you saw that one. He said, my accountant has informed me that I make a loss this year, which is increasing lightly for my company. I can claim back corporation tax already paid relating to the previous year, i.e. under existing corporation tax rules, companies are able to carry back trading losses by up to 12 months to reduce taxable profits of a prior period. I don't know if you've...
might be worth mentioning, Stephen. Yes, it is. So essentially saying that you can set off losses this year against... what's he's saying? You can set off losses this year and then claim back corporation tax that you've already paid relating to the previous year. Right, okay. That is interesting. We might need to look into that one a bit more, but thanks for alerting us to it, Stephen. And also we've got our good friend Tony Lennon, who often watches these webinars and helpfully chimes in when I'm making little mistakes here and there, because he's an expert on this stuff. He's from Beck2, and they've of course done loads of campaigning around this. I was with a colleague of yours yesterday, Tony, at the Future of Self-Employment inquiry being run by Prospect. Said the key payroll date for tranche 3 is September the 23rd. That's under the furlough scheme. And he also said that, I mentioned earlier on about the public sector guidance on furlough that was sent out was actually from the Cabinet Office, he said. I said it was from the Treasury, it was from the Cabinet Office. So thanks, Tony. Thanks for keeping us on our toes, and thanks for watching these webinars. It's good to know you're out there. I think that we've probably come to, we said we wouldn't go on for a full hour, and we have done. And I think there's a couple more questions, but I think we mainly have answered them. Look, we're going to keep updating our website on this. We are going to have some when the government release their guidance on the furlough scheme, we will be pouring through that, and there'll be more links and there'll be more information on our website around it. I hope you found today's webinar useful. Thank you so much for all of your questions and your great engagement that we always get on these webinars. Thank you, Alistair, for co-presenting it with me. And yeah, thanks very much and goodbye.